Aditya Khemka is now with us. He's fund manager, InCred Asset Management. Aditya, good to have you with us here. Good morning. Let's just talk about Pharma, which is seeing a bit of an uptake. It's been spared, but should we say for now along with it? Because if you read the executive order, it's part of sectors which are included under this national security thing. So sector level tariffs may yet come. What's your sense?
Yeah, hi, good morning, Prashant, and thanks for having me. I would agree with you. I think you should say for now because, historically the Trump rhetoric has been to include pharma as a part of their tariff on India. And, sooner or later, my belief is that pharma will probably fall under the tariff situation. And it is a national security issue. Remember, Indian pharma companies export anywhere between 50 to 60% of the volumes of medicines in the US. So, from that standpoint, if the US were to take a stance that, are they vulnerable to India stopping medical supplies to US, would that become a national security issue? Yes, it would, because 50-60% of your volumes would evaporate. So tough to believe that it won't happen. But when and how and in what shape is something that we don't know.
Okay, so Aditya, I'll ask you the same question I was asking the previous guest as well. In order to try and play this the smartest way, because we don't know what President Trump does tomorrow, whether he imposes certain new conditions on even pharma exports that are coming into the US. But what would be the best way to play this? Should you stay with CDMO players? Should you stay with players who have a great specialty generics pipeline, maybe specialty products like Sun Pharma? What would your personal preference be?
So personally, we are more focused therefore on companies which have nothing to do with US. To be honest, we are focused on hospitals, diagnostics, Indian-focused pharma companies, be it your Torrent, your Alchem, your RPG Life Sciences, your companies which are more focused on India and less to do with the US. Same goes for any hospital business or diagnostic business which is listed. They have nothing to do with the United States. So if you have to take exposure to healthcare, you are better off, looking at these kind of stocks because they don't have the exposure to US to have a risk. Understand as a fund manager, when we think about this, the entire tariff angle, whether it happens, when it happens, at how much rate, we don't know. But there is an added risk now to owning the stocks which have exposure to the US. Is there an added reward in owning them? The answer is no. So if there is no added reward, but there is just added risk, it just doesn't make sense to keep owning them. That's the whole perspective here.
That's an interesting point. Yeah, today we could get that relief rally, but this isn't over. And you have no idea what comes on pharma as well in the coming weeks and days, perhaps.
So to say for now.
For now.
There is relief. And that's essentially the point. But, well, we'll take what we get because otherwise fewer places to hide in that sense. Yeah.